Okay, welcome back to the Forex is Easy trading videos. As stated in the blog, I'm going to show you a couple of videos of the trades on the 4-hour method that we've been doing in the last few days. So this is the first one, the first trade I entered, which was the Swiss franc. So USD CHF, Swiss franc, the Swissy 4-hour chart. Now, this market was going sideways pretty well. So what I did initially was place an order to buy and an order to sell. So these two yellow lines here, that's just the high and this is the low. It was going sideways, so there was no real clear direction. So I thought, oh well, to get the ball rolling, I'll just place an order either side of this trend, this sideways movement, and see how we go. Now when I use this method, if any of the lines aren't in play, I just put them up the top of the chart or at the bottom of the chart. You'll see when I get going how I do it. So I had these two orders placed, and like all trading in this method, it's based on highs and lows, and the trade itself is always placed 10 pips above or 10 pips below that high or low. So even though my yellow line is right on this high here, the order to buy will be 10 pips above it, and same with this one, the order to sell will be 10 pips below it. So I'll just move the chart along because this has all happened obviously. Now as you see, we have a break down here on the right hand side of the chart, that big bearish candle down through the yellow line. Because an order was placed to sell, that order was filled. So immediately once that order was filled, I cancelled the order to buy. It was gone. So I'll just change my lines around because so I used my blue line as my point of entry, so that was there. And because we made a low on that candle there, I put my first yellow line there. Now here I have to bring my SAR, my stop and reverse into play. Technically I probably should have put it up there where that order to buy was, but however, since it was such a nice move down, we had a bit of like a high there. I've placed it here. So my entry was at 105.22. My initial SAR was at 106.16. That's here. So there's a 94 pip risk or a 94 pip gap between those two lines. So the worst I could lose would be 94 pips. As soon as that order's filled, there's a profit target of plus 200 pips. So my target in this case would be 103.22. Alright, we'll see how the trade progresses. And what I normally do, so I can look at my chart at a glance to know which way my trade's going, I normally put an arrow in the direction of the trade. So that was a short trade, so there we have it. Nice down arrow. Now these yellow lines, I just keep them out of the way until they're brought into play. So we've got a new low there. There's another new low on that one. So bring the third yellow line down. Now let's just bring the chart across. Now see how the market's then gone sideways for 1, 2, 3 candles. So 12 hours. Then it's popped its head up through this top yellow line, then back down again. For me, that's good enough to move my SAR down. So I'll bring my SAR down to that high there. Now the red line or the SAR is now below the point of entry. So what I've done here is I brought my SAR down to 104.98 and immediately I've locked in 24 pips of profit. So worst case scenario in this trade now, I could make a profit of 24 pips. So you always relax a bit when that happens. So we've got a new low down here, so we'll grab my fourth yellow line down, bring it into the play. Now we've got a new low. Now what we do is we take the top yellow line and it leapfrogs the other yellow lines down. And again we're going sideways a bit, so we'll just bring the chart across. Now we're going sideways and see how this candle here, bang, it's gone up through the top yellow line. Then we've got this big bearish candle back down to a new low. Well, there's a new low on this candle itself, but because that's gone up and back into the yellow lines, I'll bring my SAR down a little bit further, not much, I know, it brings it down to 104.74. So now we're locking in a little bit more profit, actually doubled what we were. We're now locked in 48 pips. So worst case scenario on this trade, I could make a profit of 48 pips. So we've got a new low here. So again, the top yellow line just leapfrogs the other ones down, and there's a new low there. Bring that down there, and it's gone sideways again. And we've got a new low here. Pretty simple. New low. Now it's sticking its head out above the yellow line, so I'll be looking for a place to bring my SAR down, but there's no obvious point yet. New low there. Now here's a spike high, and it's the end of the week. Now what will happen, we're very close. What did I say the target was? 103.22, and we've had a low of what, 103. Yeah, we're getting very close to our 200 pip target, but we haven't reached it yet, so we're still in the trade. Now, depending on what happens on Monday at the open, hopefully we'll have the downtrend will continue and we'll get candles that'll come back into these yellow lines. If that's the case, I'll be looking to move my SAR level down to there, which will lock in a bit more profit. And eventually what the plan is the price will keep on going down and hit the target at 103.22, give us our 200 pips. Then the SAR then will become just a normal buy order, and we're ready to go when it reverses and goes the other way. Simple as that. So that's the Swissy. Pretty straightforward. So far we're still in the trade and we're doing all right. So I'll have a look at making videos on the Canadian and the Aussie. I think we've had a couple of losses. A loss on each of them, and we've also in the Euro and the Euro Japan. But that's it for this one. Any questions, just contact me through my blog or straight to my email, which I think I'll put everywhere. I'll put in the description of the video on YouTube. Okay, thanks for that.